Hello, warriors. I'd also like to welcome our viewers from investing.com. Welcome to Forex Analytics Community Experience, acronym FACE. Hi, Paul. How are you? Bob, Bill, Ben, everybody. We have a great lineup today for today's program. Greg Horvat will be joining us. Greg will update us on his Elliott Wave look. Greg has won the award for Best Sell-Side Analyst on FX Street several years in a row now. If you see, we have also won it on our homepage. But I want to talk about you guys because you're why we're here. And a lot of people have a hard time, especially overseas, outside the States. You have limited choices. But around the world, you have multiple choices for what kind of broker you're going to use, ECN. There's so many different types of models for brokers that it takes an expert to be able to guide you to, what's going to be a straight deal for you, where the spreads are tight and the platform's reliable and your assets are safe. So you click right on Forest Park FX, ask for Trent or his partner, who's going to be with us on the 22nd, Josh, and they have a handle on it. They have relationships with multiple brokers all over the globe, and they're going to find something that's suitable for you. When I interviewed Jack Schwager, author of Market Wizards, he said, I asked him what's the most important thing a trader could do, and he said, find a style that suits your personality. Well, the same holds true for where you trade. Some people like to use Bloomberg terminals. We're all different. We have different needs, many ways to skin a cat in the markets and FX. So I encourage you to get a hold of Trent at Forest Park FX. At least for you to consider. If you're not 100% satisfied with your broker, he will have some suggestions for you without any pressure. Okay. I also want to encourage everyone to subscribe. There's a rumor in the air that we're about to bring prices of our service to market levels. We've been under the market for everything. So it's a great time for you to check it out. You could get the trial for $1, and you get 10 days to navigate around the site, see if you like it. I will mail you a $1 bill if you feel you wasted your $1 bill. That's how confident I am. Maybe 1,000 will sign up, and it's gonna everyone's gonna say, "Okay, Dale, I want my dollar back." You pay for the stamp and I'll send you the $1. Is that a deal? Hi, Joshua, Slavish, Paul, everybody. And I just want to show you the TL page and what's going on. So sometimes people say we're not active enough. Here's all our active patterns in play, lots of them going on. So we're long the metals. Blake caught the silver. Andre's bullish of gold. Outstanding trade by Greg Horvat. Bought the S&Ps, 60 handles to go, up 2% there. Stelios is 100% on his macro. You're not going to see a lot of volume from Stelios, but since we began, and I wasn't here from the beginning, Stelios has had 100% accuracy rate on his macro calls. Tough to top that. Okay, Andre's trading the Mexican jumping bean. He's our harmonics expert, and he has a shark formation, so stay out of the water. If you're going to, Cancun, or you're heading to Cabo San Lucas, there's a shark with the Mexican peso. Hi, Bob, how are you? Thank you, Paul. So just want to make everyone aware that it's my belief that it's very difficult to find this much talent in one company, let alone one website that's portable on your phone or tablet. and you have all the different disciplines here. Okay, so if we wanted to take a look at the pound, this is basic technical. You get all the takeaways, you get all the levels, but you could always say, well, you know, that's basic. What's Greg saying? And get an Elliott wave look. Or maybe there's a harmonic pattern that is in conflict or confirms what everyone is looking for. I like when there's confluence between the different experts. Gives me even more conviction to pull the trigger. Everyone with me? All right, let's get to the markets here. So here's your microscope on 10-year yields. Here's a little bit more of a, that was microscopic. This is more telescopic. It's a daily. We have this very big break, and we've retraced 61.8 in the bond market. There's many implications. I actually believe this will be a failing rally. We'll ask Greg about it too, in that if we end up with equality from here, it's going to get you at least back down to this breakout that we had at 263. And sometimes these waves end up being a failing rally, which Elliotticians would call a C or a 3, can have a fib extension of this move. So looking for a big break in bonds, that's going to have implications here in the yen. So people keep asking, you know, why are you shorting the yen? And one of the reasons is the view that bonds have another wave, yields have another wave to the downside. I wouldn't be surprised to see 263, 254. So here's kind of the telescopic view in the yen, where we're playing right underneath this trend line. We have this poke above it, and that's why. And here's a classic 3 drive that I teach. Here's 1, here's 2, here's 3. Let's look at it. You see it a little clearer on the 1 hour. You could call this 1, 2, 3. And sometimes within the third wave, which is third drive, not wave, it's a drive. Okay, third drive is not 2 mulligans, where if you know, hit a ground ball off the tee or shank it out of bounds, you get another shot. Third drives are technical formations I learned from J.R. Hill in the 70s. So perhaps we get another push up here, and the third would be a fractal of the bigger picture 3. So any rallies back up here to challenge it, this may have been enough glaring divergence, but you can't rule it out that we're going to give it another shot up towards a little bit above 1020. You look at a bigger picture, there's actually some resistance and confluence coming in around 40, and you're wrong over the high. This, like the bond chart, I would look for wherever we top, which I think we're close, could get something like this from here, or it could even turn into something bigger. We've been negative the dollar here, something to keep in mind. I was showing this as a descending triangle, and this was a breakdown. We called the dollar top on a turnaround Tuesday last week. We had a couple of tests here and held, and then we broke down. We had a retest. So the key element in the Dixie is going to be if you're bearish a dollar, bullish euro, or any other currency against a dollar, you do not want to see the market back above 93.70. That would change the picture. Everyone with me? Give me a Y if you're with me, because this is critical for the dollar, that they do not negate the breakdown. We got the breakdown, we got the retest, we have followed through. You don't want to see it back over 93.67. Okay? All right, so if it continues to follow through, was my contention that we're going to get a break back down towards this line where these lines intersect, which is a weekly breakout. So I considered this a weekly breakout. If the dollar's still going to be good, it's got to hold this 92.80 level in my view. The other view is we could get a right shoulder commensurate with what we see here on the left and go all the way down to 91.31, and the next time back above 95, it's a pretty bullish target. And I think that's about a wrap. Also, the yen's going to have impact on equities. I thought we topped a couple days ago on underwater on some bearish ETFs. Greg is looking for 28.30. We're almost there. And then the crude, I thought we might get one more shot down in crude, but it looks like that was it, and the corrections might be underway. Here's the look, almost a reversal week. So we had 1, 2, I thought we might get a 3, and we just missed a 3. So perhaps we're on our way back up towards 68. That should help the market a bit, although oils are only part of the picture. And I think that's about it. Maybe a quick look at crypto. Crypto seems to be, when we broke down in Bitcoin here off this trend line, I wasn't expecting it to be back up here. So you got to like the way Bitcoin's acting. I was talking to Mark Yusko. Yes, I've interviewed Mark, and he believes that crypto has bottomed for this cycle. So it's starting to look more and more like it could. The weak sister seems to be Litecoin, and maybe we get one more shot down for a 3 here. But Ethereum has a better look to it. Actually, Bitcoin has the best look to it, pressing the highs again here. Now it's starting to look like potentially an ascending triangle over 77. I don't trade it, but some people do, and I just wanted to, update it, because I really thought once we had this breakdown, it looked like a wedge, that we were going to get a third drive and a new break to new lows. But, what you think may happen and what happens is write this saying down, okay? Because we all have, we think it's going to do that. If it does that, I'll do this. But the Mr. Market doesn't always cooperate. So write down what W. DeGan said. If you don't learn how to change your mind, you won't have any change left. Okay, and take that to heart. So I'm going to bring in Blake, and I believe after Blake, we're going to have Grega updating us on its wave counts here. I know Grega from last week was looking for another wave down. So, trading's a process. What you say this week, if you get evidence to the contrary, you're always assessing and reassessing the new information and price action. And just learn to be flexible, guys. Take it from a stubborn guy. It pays to be flexible. And here's one of the more flexible traders I know. Blake goes with his evidence. He's not a perma bull, perma bear. He's a perma exploiter of Forex markets. And what are your thoughts this morning, buddy?
Good morning, Dale.
Hi, bud.
Hey.
Nice silver pip.
Thanks. Yeah, actually, silver's ripping this morning, which is great. Yeah. I bought it. I bought it yesterday at the close. Oh, actually, at the open of pit trading. So obviously early in Asian trade, basically, I picked up silver personally, and yeah, it ripped. I actually bought it on the open, which was right here, and then I picked up some later before I went to bed, like down here at like 1660, and it's been screaming ever since. But you see this triangle, it's moving out of the triangle, and man, we're coming up to some pretty big resistance here in silver, and we break through the 1680s, and then we really got something going, and it's been a decent move, but there's a lot of work to be done. This triangle is an extension from the maximum extension from this. I'm going to absolutely commit suicide here in a second. I'll tell you exactly why. Silver's ripping out of this triangle, and that would be the max extension out of here. And the reason why this is such a big deal, in my opinion, is because this is a big trend line that we're going to come into. Which will be around the 1720 level. So I think that once we get, well, I say once, in the event that we get above this 17, like 10 or so. You got to start to be a little careful with it. The reason why I'm so upset right now is I do have a pattern in play in the cable, and I played it really well this morning. I sold it, my position at and let me explain something here. In ForexAnalytix, these patterns in play that you see here. Now, I trade all my patterns in play personally through the the fund that I trade through, and sometimes in my personal account or my PA account, I'll take positions. But that doesn't mean I'm going to sit in them the whole time either, because what these are is, this is not like, oh, I'm buying here, selling here. This is a textbook setup for what you would expect in the market. So, for example, the reason why the pound dollar has a entry level of 134.20 to 134.35 is that we have a big longer term inverted head and shoulder pattern. But that doesn't mean I'm just going to buy it when it gets to 134.20, which was a couple of days ago right here. I'm going to buy it here and just sit in it. I bought it at 134.15. I sold it this morning at 134.55. I think is where I sold it, like right here earlier this morning, just before this big candle, before the news that broke from Prime Minister May, and she's conceding to a lot of they're just ongoing Brexit negotiations, and she's conceded to a lot of things, and then they're gonna continue on these talks. But the pound came under duress after that happened. I picked up the pound at 133. I bought it again at 133.87. When it ripped up to 133.97 and it stalled, I sold it at 133.94, and I said, I told the guys and gals in our chat room, and by the way, if you're a ForexAnalytix subscriber, this is where I'm at all day. This is our chat room, and there's about 80 of us in there right now. Usually there's anywhere between 70 and 100, but anyway, and look, Amir, that's making fun of me. He is mad because a lot of the guys are listening in right now. Anyway, you guys are on Jumbotron. Say hello. There's Oliver. That nice Oliver. That's cute. Ziggy put Batman. By the way, that's an old joke. Batman. It's an old joke. But anyway, everybody's saying hello. But I'm going to take you guys off for a second. I was telling the guys and gals in the chat room earlier that I'm wussing out of the pound because I trade pretty big size, and big size is my small size is big for most people, and I took a small position in the cable. I took a small position in the cable here, but when it was struggling in the 90s, which was basically the underside of this trend line, which is the old neckline, I'm like, I'm going to pull it off the table. Took it off. And then, of course, as soon as I take it off, it rips up another 30 pips. So, yeah, that stunk. But you know what, Dale? It happens, and I can't cry over spilled milk. But the pound basically was coming back and retesting this the neckline of this inverted head and shoulder pattern. I still think the cable is bullish, and I still will buy it at some point today. I think if we can hold above or hold near 134, I'll probably be getting long at some point today. But that's the cable. I actually was long the euro dollar, sold it this morning at 118.27. I've been long this since I was long this from like 2 days ago, and because we had this and Dale, and everybody else, if you've been listening for the last couple of days, I bought it right here at 116. I want to say 116.80, and I had my stop at 40, or no, it was 117, right around the 117 figure. My average was. When it dropped down to 116.55, I had my stop at like 40. So I came really close to getting stopped out because I wanted to keep it below this trend line. This is this long-term broken trend line. It didn't hit my stop, thankfully. Then the news came out that the ECB members are discussing actively at the next meeting, exiting quantitative easing. And so the euro has been moving higher since then, since those comments, which really, I would say, luckily for me, really saved the euro. I mean, technically it was where it needed to be, and obviously I'm bearish the dollar, which I have been for the last few days since I've been back from vacation. But those comments really saved the euro, and the euro had rallied up. Now, the reason why I sold it this morning, if you don't know, if you're a ForexAnalytix subscriber, you would know this dotted line right here is the previous support, current resistance, which is also near the 618, which is 118.20 something. And if you look at ForexAnalytix and you go over to the basic technical analysis here, let's expand that a little bit. This is, by the way, the beta version of ForexAnalytix that we will be releasing here over the next hopefully in the next week and a half. Anyway, you can see the euro dollar has hit the previous low from May 9th with the 4-hour RSI reaching overbought on the RSI, which could elicit some selling on a pullback, but dips to 117.40 will be well supported. So basically what I'm saying here on the euro dollar is we're up against some resistance, and what I'm personally looking for is I'm looking for a dip like this to be long. Will we get a dip like that in the euro dollar? I'm not sure, but I will be ready to buy the euro dollar on any dip if we get it. So that's what I'm hopefully looking for with the euro. Now, one of the things that makes me believe that the euro dollar can pull back like this is that you look at some of these euro crosses. Let's start with the euro yen. So the euro yen has had a nice V-shaped recovery since last week. So while I was out on vacation, the euro yen took an absolute nosedive to 124. We've bounced six. Now, think about this. We've bounced 600 pips in a week. Yeah, I understand that equities are stronger. So the euro yen may have been following, the equity markets a little bit, and Italy apparently is fixed. I'm saying that with a little bit of sarcasm, but the euro yen has come back to the 618 retracement, and I've been looking at this downtrend line, which we're basically on. I mean, you can argue that we're above it slightly, but we still have some time. This is going to be a really important level for the euro yen over the course of the next few hours. So if the euro yen stops here at this 130.15, or let's just call it 130 level. I know we're at 130.20, but like I said, we can get an overshoot. So it's not, support and resistance or trend lines. It's not an exact science. If it was an exact science, that we'd all be gazillionaires because it would be exact and we'd know exactly where to enter and exit, but it's not. So these levels that you see here, whether it's a fib level or a trend line, they're all approximations and it's all within a vicinity. So like I said, the euro yen's pushing some pretty key resistance. If it holds, which I think it may, the euro yen the euro dollar may stall up here and give us a little bit of a pullback. Again, some of the other euro crosses, you got the euro Aussie. It's had a nice bounce off the lows, but we're still making lower lows and lower highs. So we could be, let me draw a bit of a drawing here. So lower highs, lower lows. I wouldn't be surprised if we continue in this pattern, at least for now. You take the euro New Zealand, it's pushing the underside of a broken channel, so we will probably stall somewhere around here. Euro Canadian, I don't really deal with too much right now because of the ongoing NAFTA negotiations, and the euro, or the Canadian's kind of doing its own, it's kind of doing its own thing at the moment. Euro Swiss has had a decent bounce, but not really going anywhere. The euro pound, which, by the way, our own Amanda, who for some godforsaken reason will never come on this webinar because she really is she's a little shy. We try to give her a hard time so she'll come on here, but Chances of that happening seem slim to none, right, Amanda? Uh-huh. Yeah, anyway, she shorted the euro pound right here, right at the highs. She's right now, she's saying, yep, that means she's not coming on. That's Amanda right there. Hi, Amanda. She shorted the euro pound right here at the 618. Chi, who's also in our chat room, he also noted that it is the 200-day moving average, and a bunch of other people shorted the euro pound that's in the chat room. Did a great job right at 88.30, so 88.32, 88.34, and picked up. Well, right now they're up a good 20 pips. So, but what I'm trying to point out is the euro pairs are up against some pretty key resistance. So. You got to be a little careful with the euro dollar at this moment. Does that mean that I'm bullish the dollar index? No, not necessarily, but I think the euro, may have, this near-term upside may have run its course a little bit. I still think overall the euro dollar, if you look at this inverted head and shoulder pattern, I'm going to clarify this for you. So this is where the neckline is. It's not here. Let me remove that for a minute. There's the neckline on the inverted head and shoulder pattern, right? So the upside that you would expect for this particular chart pattern to fulfill would be to 120. Now, why is that a big deal? Because 120 is also the 200-day moving average. It's also recent highs. It's near the 50% retracement of the complete drop. So eventually, I think the euro gets to 120. Does that mean that I'm going to get long right here, close my eyes and wait for it to hit 120? No. What I'll probably do is I'll wait for a dip below 118 and I'll start nibbling at it and trying to get long as we get down towards 117.50. I think if you bought the euro dollar right now, you closed your eyes for a couple of weeks, you're probably going to eventually get to 120, but I think there's better places for entry. You're probably going to be able to get sub 118 level and pick up a better entry price as it's moving its way up towards 120 over the course of the next 1 or 2 weeks. So that's what I think is going to happen. And keep in mind, we have the G7 meeting this weekend. Today's Thursday. We have the G7 meeting coming up. From all accounts, we're hearing that Donald Trump's going to take a hardline approach towards the G7, which I don't know how it's going to affect the dollar. A lot of people think that it might be dollar positive, but my 2 cents is it might be a little dollar negative. People might look at the dollar and say, you know what, Donald Trump's taking such a hard stance against trade, we're just going to start shorting the dollar. So you got to be a little careful about risk and about owning the dollar as we come into this G7 meeting over the weekend. This is not, G7 meetings in the last several years, especially with President Obama, had been very, very, very boring. I mean, there hasn't been anything going on. Now, your radar antenna ears should be up as things could get a little bit more, quote unquote, spicy. All right, another position that I'm in currently is I'm short the US dollar Japanese yen, and it's been a very frustrating trade. We're at the 618, we're at the 200-day moving average. Yields have been very strong, which is driving me absolute. Oh my God, are you guys watching silver? Holy cow. So silver just broke the 1682. Oh my God, it is squeezing. Holy moly. Look at silver, just absolutely ripping right now. Woo, I'm going to have to sell. I'm going to sell a position, just part of my position here. Okay, I just sold. I just sold part of my position because
because you never go broke taking profits, partial.
No, and when it breaks above resistance, I always want to be on the side of taking profits as everybody else is trying to get in, like through the momentum. But these could end up being false breakouts. Now I will be adding what I just sold back on dip. So, whether or not we hold this, is to be seen. But any dip now towards 1670, I'm a buyer. So now I'll be looking for
like, sorry to
Yeah.
interrupt. Hey,
Hey, Stel.
I obviously like the silver move as well. I
You
just want
always
to
like silver. I think, you know, I think you're the probably largest Greek holder of silver bullion in the world.
Yeah, I wouldn't
That's
say
true,
that.
right? It's a true statement.
I wouldn't say that. Don't give out
No,
my address either.
Alexander the Great was.
I wanted, yeah, actually, you're right. I wanted to say that we have to remember that the DSI is still very low on silver. I think it was 20 last time I checked, and it's been in the low teens for days and days. So this thing that where silver is outperforming gold is probably a little bit of a squeeze as well, short squeeze. But obviously, it's in
We
line.
talked about that ratio for a long time, haven't we?
Yes, and you, Dale. Every time we have a guest who's into silver or precious metals, it's one of the first questions you ask, about the gold-silver ratio, which I think is very important to look at.
As long as silver is outpacing gold, it's really more of a bullish precious metal outlook.
Usually, yes, that's the case. Yeah.
Usually. By the way, in case you guys didn't see it, the initial jobless claims came in at 222,000, which, I mean, I haven't been watching jobless claims for so many months. I don't even care, and unless claims start getting closer to 300,000 on a weekly basis, I don't even watch it. Employment's at pretty much full employment right now here in the U.S., so we don't get a lot of variations in it. It's if that picture changes, like I said, once unemployment claims start to get up towards 300,000, then I'll start paying a little bit more attention, because then I will think that the labor market's starting to show some weakness, and because slack is pretty tight right now, I think. So anyway, it's not affecting the market at all, the weekly unemployment claims. Hey, Stelios, good morning, by the way.
Hey, hello everybody. We don't have Steve. We don't have Steve today, so we're here. I'm here, and Greg is going to be here to fill in.
Yeah, Steve's out of town in some on some personal business, and he said he's leaving for 22 hours, and somebody in our chat room is like, where do you go for 22 hours? But I can fly to San Diego and be back and forth in a day, but I know he's island hopping between Greek islands, so I don't know if that's that much fun. Is it, Stelios? I mean, flying in a biplane.
Yeah, you know what? As long as you're near a beach, I'm happy. So.
Yeah, all right. You're always near a beach. So, so anyway, so Stelios, I know Greg. Oh, is that Gregor?
Yeah, yes. Greg is here now.
Oh,
who else?
Greg, how are you? Good morning.
Morning. I mean, afternoon here. How are you?
Good afternoon.
Oh yeah. And hey, Greg.
Hey, just so everybody knows, Gregor, where exactly are you at?
I'm from Slovenia, so this is between Croatia and between Austria and Italy.
So you're from
Italy, so
you're from Melania Trump country.
Yes, exactly. So we are very good known now since Melania Trump is first lady. So.
Yeah, well, didn't you go out with her in high school, Grega? Didn't you date her and you gave her to Donald when you were tired of her?
Yes, he paid me well. So.
And I'll tell you what, you guys breed some beautiful people over there, and I'll tell you, it's my wife has seen pictures of your country, and she's like, I would visit there more than any place in the world. So
yes,
don't be surprised if at some point in the near future I might be heading over to your neck of the woods. So
we have sea, we have mountains, we have very beautiful green nature. So actually everything on a one small place.
Well, I hear you have good Elliott wave technicians. So so what are you seeing? I know you want to be able to share some of your views, and I know via ForexAnalytix you've got some active patterns that you're playing out here. But one of the big components that I really want you to talk about, I'm going to pass it over to you because I got to get to my trading day here shortly. But I want to talk about the S&P because the S&P has had a strong move higher, and since we got so many traders in from investing.com this morning, I know a lot of them are going to be more interested in to see what's happening in the broad market. So what do you see in the S&P right now? And I'm going to pass it over to you as you're discussing this.
Sure.
Good luck today.
Okay. So Dale, can you see screen? Yes.
Yes, we got it.
Okay. So Dale, if you recall, I was looking and highlighted two patterns on Friday. So it was on Friday or Monday, I don't know. I think it was on Friday. So actually, what we talked about is that based on current developments on the S&P 500 from February lows, it's still unclear if this major uptrend is back in progress or is this just a very choppy consolidation. And what concerns me is that this rise is not really strong. Okay, we have some momentum coming in here in the last few days, but still we have to be aware that we are running here into this potential resistance zone. So
that's about 2,800, right, Grega?
Yes, exactly.
Roughly.
So
okay.
Actually, on Friday we highlighted that this level could come in play, even if we are still, or I am still bearish on the longer term chart, because we know that even if this left to the upside is wave C, it still should be structured by 5 subwaves. And also, what was probably the most important back then, last week, is that this decline on a smaller time frame unfolded in 3 waves. And I know that this is a correction. So based on this interpretation, which is longer term, suggests that we are still in a big consolidation down from January highs, is actually it actually still had room for more upside. Okay, so this, despite very bearish wave count, there was a bullish short-term trading setup.
Great
so
call.
That's why I also went long, and I was even more confident into this long, especially if I consider my second count, which is bullish after all. So with 2 wave counts, bearish and bullish, I came out with a one short-term the same direction. And this was for a potential rise towards this, into this resistance zone. So at this stage, I still don't know if we are going to new highs or we will reverse to the downside. But what I know is that if I'm long, I need to be very aggressive on tightening stops, but still, as always, as you know, Dale, yourself, I always try to leave my targets open, right? And if I consider
where would you move them up to now, Greg? And you do that and advise people on the pattern and play, the invalidation level changes, correct?
Actually, I would go out if we see a drop beneath 2760, because this, as you see, we have seen quite an aggressive rise here. Okay, yes. And if we are going even higher after a correction, then this wave 4 should stay above this trend line here on our chart.
Thank you.
If we drop here into this wave 1 territory, then this would be even more bearish sign rather than bullish, because in such case we would probably also be turning down from this trend line resistance that we are now trading at. Okay, so as I said, I have to be aggressive on trailing stops to protect profits, but need to have open targets, because after all, this bullish count is still valid. It still can be a very big upside potential if maybe this is really wave 3 underway. Now you can imagine how high then we can go here if we consider that even this wave 3 should be made by 5 subwaves. Right?
Now, Greg, real quick, I know you know you're a technician, but you also look at other things too. Seasonally, we're in a tougher time this time of year. You know, the seasonal aspect of equities is sell in May, go away. Now that means, you know, sell in May, you know, when you come back in, you know, September, you should be able to buy stocks cheaper, basically. Does that mean that the market turns around in May? No, it could turn around in June, or maybe even late June, July. So are you thinking about the seasonal aspects of equities as well, knowing that the stock market is in that tough time?
Definitely, because if we consider that summer can be very slow, I think it's actually perfect timing to be this market still trapped in this wave 4 consolidation that can be underway from, as I said, from January highs. So, but sometimes, as you know, there are also years that summer is very volatile, and you can see very strong moves as well. So I have to consider both sides of the market, but I would be very, very careful, definitely not be chasing any longs here at this stage. I would either wait on a very strong push to the upside, and then I would be buying pullbacks because I would be confident that we are in this bullish phase after all. Okay?
Great. Okay.
So
great.
At this stage, at this price, it's some kind of a do or die level, and I would not be chasing market here.
Awesome. Hey, guys, I'm going to have to check out because I'm going to have to get to my trading. So, Greg, I'm going to let you continue with Dale and Stelios, but I want to say thank you for coming here. I want to thank everybody who's listening in. And remember, if you guys are, if you're looking for a broker, you're not happy with the broker that you currently have, make sure you contact Forest Park FX. That's Forest Park FX, but use the link from our website. They are our sponsors, and if you do that, they can hook you up with a reimbursement program, so you can get ForexAnalytix for free. If you're here in the U.S., you might be able to get some other benefits, or excuse me, if you're in Europe, you might be able to get some other benefits. Well, actually, it doesn't really matter where you're at. They'll help you find a broker that'll serve you best. So make sure that you get in touch with Forest Park FX through ForexAnalytix. And thank you very much, Greg. Thanks for being here. And I know you got more analysis you're going to cover. I'm interested to hear what you have to say in bonds as I start my trading day. So
good hunting, Blake. And
thank you.
Greg, you know what? I was walking through Forest Park one day in the merry, merry month of May, and I ran into a guy named Trent who said that my broker was a little bent, so he found me another way. What do you
That's
think?
amazing.
Huh?
You have your minds in every place, man.
Yes, being bipolar is a wonderful thing. So, all right, Greg, I'm with you, and this kind of ties in with your yen outlook too. The yen has rallied while yields have come back up towards 3%, and prices have pulled back. This was the pullback you actually were looking for. Is it a little deeper than you thought it would be?
Yes, it's quite aggressive, as you can see, but there is still this trend line that matters probably the most, connected down from September 2017 highs. So I think that there can be still some buyers coming in, at least temporary, if not aggressively, up for a wave C. So if this happens, as you can see here on this overlay chart, move to the upside on stocks.
Right.
This one, as you can see, it occurred exactly at the same time when this 10-year US note moved to the downside. So if this support would hold here, and every technician, not Elliott wave technician, every technician probably would see this chart empty, if you would draw trend lines, which are actually, it's your primary tool to analyze the markets, probably, then everyone would pay attention to these levels right there, right? So a bounce should be expected, and if this really comes in play, I think that obviously S&P 500 could face limited upside here. So that's why I'm also focused on dollar yen, where I think that there is potential to see a reversal lower. In fact, if you notice, dollar yen is trading still at resistance, is not so bullish, despite 10-year US note moving to the downside, despite very bullish stocks for the last few days. So I think that actually a we may experience an aggressive fall on dollar yen if S&P 500 and 10-year US note will turn around. So as you can
That's
see,
how I'm positioned.
We are just chopping around here.
Yeah.
On dollar yen, and S&P 500, as you know, rallied how much this week?
Yeah.
3%, I don't know.
Right.
So actually,
yeah, you're up about 2.5–3% on your PIP, your pattern in play on S&Ps.
Yes, I know, and maybe even more if this will continue to rise. But as you know, what I noticed from statistic point of view, if stocks are bullish from Monday to Thursday, aggressive bullish like now, then we can expect a slowdown in the second part of the week, which means Thursday, Friday, you can expect a slowdown. Because statistically speaking, there is rarely happening that you will see the same amount of progression in Thursday and Friday if you have seen a very strong moves in the first 3 days.
Interesting.
So it's also regarding profit taking, probably which causes market to slow down. So definitely I would be expecting maybe at least a slowdown, if not a reversal by tomorrow.
Okay, so your overall view, I remember last week you were constructive the euro. You think eventually it's going to make its way up towards 120. Games
yes.
still on?
Yes, I was expecting.
I remember all your calls, Grega.
Oh, okay, perfect. So you have a note. After my webinar, you put the notes.
It's all mental. It's in my head.
Nice. So actually, yes, I was looking for recovery here on euro dollar. For now, it's in 3 waves. It's not a 5-wave movement. So if someone says that this is start of a new bullish reversal, I think still it's too soon. We are in a 3-wave rally here towards 38.2%, which after all can be maybe even a wave 4. But if this recovery would become a 5-wave movement, then I would say that we are going back to the upside. So 5-wave structure would probably be very, very important if we get these 5 waves up, because we are after all bouncing from this trend line. So still I'm kind of careful here with potential long ideas, but if we get 5 waves up, I would be probably looking for
how many have we had so far?
How many waves?
One? Is this just one or a?
This is, we have 3 waves here.
Okay. Right now we have 3.
Yes. So at the moment we are either in wave C, in final stages, or we are in a wave 3. So from a trading perspective, I really cannot do anything here. I just wait. Okay. So if I'm bearish on the longer term, I would probably wait on a drop back beneath this wave B level. Okay, because once this level is breached, this is confirmation that the rise that we have seen was corrective. Okay, if we see a continuation to the upside in 5 waves, then I would wait on a 3-wave retracement, and then I would obviously trying to buy a pullback. So we are at critical level here on intraday chart, and for me it's just waiting on more price data before I can maybe look for some opportunities here.
Now that was very important tactically, Grega, because a lot of people say, oh, well, if you're bearish, you're going to wait until it breaks down, you know, you're going to give up the first 200 points of the move. But just like Steve Volge, you would rather not catch the beginning of the move, but have confirmation that at least you have a higher probability of being right once it does something wrong, instead of trying to have a lead into the event.
Yes, but this is also very important. You know why? Because if I wait, let's assume that I'm bearish, okay? And I will now label this as a corrective movement without A, B, C, okay? Now, there are a lot of aggressive traders that would already want to look at the shorts at these levels. But here could be a trouble, because where will you put a stop? there is a chance that wave 4 will retrace back to the area of a former wave 4, I mean termination point, which was here. So your stop should be very wide. But if you're patient, if you wait on a confirming price action, which means firstly you will wait on a decline through this trend line support, okay, and towards wave B level. And once you see this decline happening, then you can be convinced that corrective rally is completed. And this is in your advantage, because in such case, if you will go into a trade, you will exactly know where to put your stop loss above wave C, obviously. So you will have a lot more better.
It's defined
regarding risk reward setup trade.
Yeah.
Right.
Thank you, Grega.
That's why this, I think it's very important to always observe the price action and not just act when you see something, but let the market confirm what you're looking for and then take a trigger.
Nice mentoring.
So.
Okay, so there is a lot of interest in what's happening in metals here. Greg, I know you were, I remember when you called the washout towards 1286 or so, and you said, you know, the metals would be sideways to higher, but not much lower. So we're coming out of here. Did you see silver as being the leadership here before we took off here today? And go ahead.
I have here, we can take a look at this silver, gold silver ratio.
Yeah.
Daily chart, and as you can see, we are falling quite aggressively here. So it appears that now it's more safe or better to be long silver against the dollar rather to be long gold. But gold still has a potential bullish setup here, but silver is much more volatile. So watch out. I would say that traders should probably pay a lot of attention to gold silver ratio, because it tells you a lot here. If someone is today maybe long gold and he's watching silver, he's probably scratching his head right now, right? So I think that this gold silver ratio suggests that there may be better times for silver, even if we see gold breaking potential to the upside. Still, silver has potentially then even more gains ahead, if we consider that in this current correlation, silver or gold silver ratio is declining.
Okay, great look.
So actually, if we take a look on a daily chart of gold, we are still sitting at this trend line, and I'm expecting actually a bounce here. But from a trading perspective, this was just not enough clear to me that we are really turning bullish to the upside. We should see something more aggressive from the lows, and definitely in 5 waves, which unfortunately did not happen. That's why I'm just watching this market from a distance.
Yeah, it was all about silver.
Yes.
Okay. Stel's going to take over for a few minutes. Grega, thank you for your clarity today, and I love your work. And I've done interviews, and people have said, Dale, do you do your own Elliott counts? And I go, well, that would be suicidal. I depend on Grega Horvat. So thank you for being here. Stel probably has a few questions, and I'm going to go get ready for our interview, the interview I have with Don Miller. So thank you, Grega. Okay, Stel, thank you, buddy.
Grega, before you go, we have just a couple of questions. There's our friend Lee who's asking about oil and how high you think it can bounce before another leg lower.
Yes.
Quick look at that.
As you know, we have been bearish crude oil.
Yes.
And now, since market unfolded this 5-wave decline, I think it's time for a bounce if we consider that recently market slowdown at these interesting FIB support levels. This is actually, these are all, I will not go into details here because we don't have enough time, but these are all FIB support levels that suggest where wave 5 could potentially end of this 5-wave cycle. So we are holding these levels quite well here. So I assume that that crude oil could stabilize prices here and maybe even make a pullback. Now, always when I'm expecting pullback, I will watch out for at least 38.2% against previous 5-wave fall. For now, we'll take a look. We didn't retrace even 23.6. So if we assume that low is maybe here in, then watch out and be aware for potential rise towards 67.50 or even $69.50 per barrel. And here's also then this former wave 4 resistance, which should be even more interesting for potential reversal if we reach this level. So at this stage, I think that crude oil, after all, moved very aggressively to the downside. It fell more than $8 in just, what, 2 weeks or so. So definitely it's time for some correction coming in, and ideally this will unfold as a wave B, which will then later take us even lower, potentially after retest of this trend line that was broken last week. So I would be expecting more downside, but for now there is room for higher pullback.
Great, and I must say, Greg, I remember when oil was hitting, $70 and going higher, and it was just looking like a juggernaut, and it was trading really strong. You were already starting to warn, that we're close to the end of wave 5, whatever it was, and there should be a correction, and everybody was looking for higher prices. And like you said, within a couple of weeks, we've had a big drop. So that was really good. That was really good.
Yes, unfortunately, I'm sure that there are a lot of investors that were kept on the wrong side of the market because they are normally very late into this party, and media goes crazy after you see some aggressive moves, like for example Bitcoin last year. So that's why Elliott Wave is so powerful, because we are tracking those psychological cycles actually from traders and investors. Yes. So that's why I think that you really should be more focused. Everyone should be more focused on price action rather than anything else.
Yeah,
like media, or because there was someone who already called we are going to $100 per barrel. This is still possible, but
it's the usual, right? You're trading at $70, they call 100. You're trading at $28, $30, they're calling 10. It's always the same thing, So really good, really well done, man. If you have time, just for one last question before we get to the guest, we have our friend Siavash who's saying, "Hi, I'm long Euro Yen 126.68. Well, that's very good. My initial target was 130.32, but I'm seeing now it has a potential to go around 142. Thinks that it's looking for a 5-way sequence with the upside after a pullback. If you can have a quick look at Euro Yen, that would be great, please, Gregor."
Actually, to be honest, I expected more weakness on Euro Yen, but after this really strong bounce from the last few days, which occurred after all from this wave C equality level, so wave C was similar in distance compared to wave A. This really looks good for this trader, because momentum is here on the bullish side. It looks very aggressive price, so I would not be surprised to see even more upside, but be aware of pullback. So if I would be long, I would probably cut some position here, book some profit, and make tighter stops, and then just leave it targets open, because if after all, from any reason, this trend line, upper trend line, gets broken here, then we know that this correction would be confirmed as finished, and price should retrace all the way up to this February highs.
Great. That's great. Thank you, Gregor. Thanks again. I mean, it's really great analysis, and we've covered a lot of instruments, I think. So thanks for being here. And I think Dale may be back. I don't know if our guest is
I am.
Oh, hello.
And our guest is here. And Gregor, you always crystallize the markets for me. Come in every day.
Thank you, Dale. Yes, if I have time, I will be here.
All right. Thank you, my trading warrior brother. Stel, thank you for working the show with me today. Blake, thank you, Blake, and good hunting. And we do have Don Miller with us. And I talked to Don, I don't know, a year or so ago, and he was doing things privately, and he's come out of the closet and is doing things much more publicly now. And I'm looking forward to talking to him. Hello, Don, and I'm making you the presenter. Looking forward to hearing your voice and seeing your screen, buddy. Just passed you the baton.
Okay, okay. Can you hear me?
Can hear you clearly, Don. How are you?
I am doing very fine. How are you?
Okay, do you want to share your screen? Was there anything you wanted to show, or okay?
Yeah, I've got multiple screens here, so I'm trying to figure out how I indicate which one here.
Okay, it'll show you different screens when you hit that option. Right now we're looking at there's more to the conversation in audio screen. So
Okay.
Okay, now we're looking at some charts, Don.
All right.
All
Well,
right.
first of all, yeah, thank you, Dale. Thank you. It's been a while. I like how you said I'm coming out of the closet a little bit there.
Yeah, well, it could have one
Yeah.
more than one meaning, right? It's
Yeah,
funny you talk about closets, Don. I was taught by an old veteran when I went to work at the CME. He said, Dale, make your money in a closet. Do it quietly. Don't draw attention to yourself. Don't buy flashy cars. Just be humble and go about your business quietly. And he used the closet metaphor.
Yeah.
So
Yeah.
you're not in the closet. Is that a real view of the ocean out your window there?
No, that actually is I'm about 2 miles. I live on Cape Cod in Massachusetts.
Oh.
I'm about 2 miles from the water, but that's as close as I can get. That's a mural.
Oh, that's beautiful. It looks real. It's like a real set. And
Thank you.
Don, it's great to have you here in our community. And I'd like to start off with you're very well known for your book. You wrote Chronicles of Narnia. Just kidding. Just kidding, Don. Chronicles of a $1 Million Trader, published by Wiley. And they don't just publish anything, okay? You really need good quality content for Wiley to do this. So how many years ago did you write that? And I'm even more interested in what it was like for you at the beginning of your journey into trading before you even wrote the book.
Yeah, thank you for that. John Wiley had contacted me several times to do what they wanted to have as an update to the infamous Reminiscences of a Stock Operator book. And they wanted something that could be updated for current day technology, current day market rhythms, any nuances that may be different now than was that were in place back when that great book was written. And so
wow, what a high bar. What a high bar for you.
Yeah. Well, that's one of the reasons I said no.
Okay.
And I thought about it, and it got to a point where between them kind of pestering me a little bit in a good way, and myself really reflecting back on my life and my career, and more importantly, the challenges and the battles that I had to fight through, I felt that it would provide me a venue, it would provide me an opportunity to share the experiences as much to make sure, as I say in the book, that people are less inclined to step in the same crevices that I stepped into during my trading. And it's kind of funny how that evolved, Dale, because the Wiley folks and I went back and forth on the cover and the title, and the cover's got this guy like this, and the title says Chronicles of a $1 Million Trader, and they say, well, you need something that grabs people's attention. And I said, well, that's all fine, but as long as I could have control over the subtitle and the content, I'm good. So we've ended up something, I guess, that is an eye grabber, but the subtitle, which is my road valleys and peaks to trading, the valley piece was very important to me, and the transparency, Dale. When I've been in the public profile over the last couple of decades in this business, it's been very important to me to talk about and talk through the lens of transparency in terms of this is not a get-rich scheme. I don't ever want to be seen standing next to some car saying, look what you can do.
Oh, yeah.
I have for some reason been given the honor and the privilege to make it through some rough times and come out the other side. And I want to share that story in the interest of helping others. And I wish I would have had some of the tools that I'm trying to make available to people now when I first started. I wish I had a mentor. I wish I could spend time with them. I wish I had
Did you update your charts by hand and use the Commodity Perspective chart book?
No, I don't go back that far. I don't go back that far. In fact, it's interesting because I grew up in when I grew up in trading. I'm a financial executive, so half my career I've been CFO, CEO, that type of thing. and the other half, which I'm back in now, have been an entrepreneur in the trading world. And so when I really got attracted to trading, as I say in the book, it was really when the internet was coming of age.
Okay.
So I never had to make the floor transition to screen. I did have to make several transitions, for example, going from a fractional world in stock trading to decimals.
Okay.
And as other changes have happened, so I've had to evolve certainly, but I am not encumbered, or maybe that's not the right term, but I learn on the screen, and that's where I come from.
Okay. Well, you know, Don, you talk about valleys, and we've all had them. You know, I kind of say, you know, people out there that say, I'll sell you the secret to trading for $9,099. I say there is no secret. That's a secret. It's hard work and perseverance. What did you do during your valleys, during the drawdown period, that helped you persevere during when you were going through some hard times?
Yeah, I'll be frank, I'll be candid. I'm not here to preach, believe me, but it was my family and it was my God that got me through all of that.
Wow.
My family was incredible support system. My wife has always been behind me, beside me, in terms of you know, A, having the faith in me, and B, you know, agreeing to be with me and supportive of me no matter what, no matter where we are, no matter what we're doing, no matter how well or not well off we are financially. And the story, as I tell in the book, was, you know, I wanted to make sure I was leading the Midwestern operations for a telecommunications firm in the late 90s, and you know, I got bitten by this bug, and I thought I had a plan, Dale, right? I said, you know, geez, I've got 6 months of part-time trading experience that's generated X. You know, compare that to what I was making as a corporate executive. I'm thinking, well, that's really a no-brainer, even though I was doing very, very well, and this is when I was in my upper 30s. So I made the switch in April of that year, and in that April, I gave back everything I'd made in the prior 6 months.
Man plans and God laughs, Don.
Yeah. So, and you know, here I am, you know, just bought an executive home. We built our dream house on the side of a hill in Wisconsin, and I had my kids that were in elementary and middle school, and you know, I really thought I'd made the worst decision of my entire life. So what I had to do is I had to reassess, I had to retool. My family offered me a family house back here in New England, which was a house that I grew up in as a kid, in the summers anyway. And it was a great landing spot. And from there, once I ate that humble pie and did a lot of introspective research and review, that's when the tide started turning incredibly in my favor. And through no great thing that I did, other than maybe just take myself down a few notches and go at it from a different perspective.
Yeah, so you had to downsize, take the heat off, and become Lazarus. So I think that a Lazarus experience is something anyone who stays in the game for a few decades has to experience. So why don't you tell our audience a little bit about Jelly Trader, and perhaps that has something to do with the charts we're looking at right here.
Yeah, so it's interesting because when I first started trading, I was asked pretty quickly to write articles and teach, and I for some reason I've been given the I don't want to say it's a blessing, maybe it's a curse of having a couple of different skill sets, one of which is that of a communicator. So, you know, I was doing writing for trading markets, you know, back in the Larry Connors days, and teaching, and then I went off the grid because I felt I was becoming more of an author and an analyst than I was really a trader. So I wanted to buckle down on my own trading, and then I kept getting nudged back to this field because I come to the field of education because I come from a family of educators, sisters, parents, grandparents, and I enjoy that part of it. So when I came back, this is about 2008, 2009, when the light bulbs were really kicking on to me, and I can share the two huge light bulbs that came on to me in a little bit. You know, people asked me to get back into the educational part of it, and I said, okay, if I'm going to do it, how am I going to do it? And so I said, I would want to provide what I wish I would have had early in my career, and that would have been extended time with someone who hopefully knew what he or she was doing, and and just the ability to be with that person for an extended period of time, different market rhythms. I don't want to do a Saturday seminar and then you show up Monday and it's completely different, right?
Right.
So it was important to me. So we created this program back, I think it was in 2009, called the Jellyfish Program. And the Jellyfish description really was intended to reflect the adaptability and the flexibility that's required on the part of traders. We have no control over the markets. We have to float where the market goes, and we have to adapt to the market conditions, just like a jellyfish. A jellyfish in the ocean has no self-propulsion capability. The jellyfish has to eat off of the environment which he or she is placed in, and that's very much like trading. So we created a program designed around that, and I had 120 people that wanted to do it with me. I only wanted to pick 20. It was not a money grab exercise, and I wanted to take people from different walks of life. So I took 2 professional athletes, 1 former NFL quarterback. I took entrepreneurs, former floor brokers, corporate executives, homemakers, and so we did that for 8 weeks, and then that became the context and the foundation for 14 subsequent programs I've done over the years. What you're looking at now, Dale, is really the next evolution, and I'm not here to sell, market, hype any of this. I will certainly explain what we're doing if people are interested, but I've evolved in my thinking from a person who's wanted to teach and encourage self-sufficiency to believing that I believe we're not meant to live this life alone. And so it became a bit of a mission of mine to find some way to network independent trading offices around the world, and to do so and redefine the traditional chat room by having something like a common data stream. And that's what you're seeing here. You're seeing a common data stream that right now 130 offices around the world, 130 traders in 13 countries and 5 continents are all following. And we're able to talk about this and discuss it and narrate to it over the course of the day. We have a licensing agreement from the vendor that allows us to do this. And so the idea is really to leverage off of each other, to create a network that's—
what kind of charts are these?
Yeah, and a network that's holistic, Dale. One that it's not just charting, it's not just technicals. I believe, looking back at my career and my valleys, and you know this, right? It's up here. It's up here.
Yeah, it's all in your head.
And so we can talk charts, patterns, waves, and all that, which we do, and wholesale opportunities. But to me, this has to be looked at from a holistic perspective. We got to be looking at the technical aspect. We also have to be looking at our mental mindset. John Wooden, the great UCLA basketball coach, was a great proponent of reminding us that it was as much what we did off the court and how we prepared ourselves off the court than what we did on the court. And we were talking last night amongst the team that it's really about, you know, what is it, the art of war, right? That most battles are won before the battle occurs. The planning, the mindset, and that. So this is a subset, what you're seeing here in terms of the things that we follow over the course of the day with the S&P futures markets. That's what we trade.
Okay. So what's the difference between ETH, Russell? Is that that's the E-mini?
Yeah, these are all E-mini Russell.
Yep. Okay.
So we have different subsets. For example, live ETH represents the combination of charts that we follow during the extended trading hours. So between 5 p.m. Eastern and 9:30 a.m. Eastern, we're following actually what the market is doing live during that time. One of the things that we focus on and that I focused on over the past 5 years is those market opportunities that happen outside of the normal United States trading hours.
So more easily exploited. Fewer participants.
I really feel that way. It really still stuns me a bit, right? And I think a lot of this goes back to the floor days, right? Right. The bell goes off at 9:30. A lot of those folks are done by the first hour. You know, certainly wrapping up by 4:30, and it's done. And we now are in a 24/5 global world, right? We have liquidity which has increased greatly overnight. It's not always there, but there are times. There are times when Europe opens 3 a.m. my time. There's times when the Nikkei opens at 8 p.m. my time, Shanghai 9:30. There are repeatable patterns. There are very distinct repeatable patterns with the S&Ps during those times that I spent the last 5 years studying, researching, and reviewing. And so I make about 90% of my P&L is made outside of the 9:30 to 4 hours. And so what we do is we follow that, and then we, of course, during the course of the day, the normal trading session, which I just switched to, this is what we will look like through the eyes of the cash market when we open at 9:30. We're going to be gapping up at 75 off of a very strong close near 72. But in my eyes and in my mind, it's not a gap. We actually traded and trended with rhythm, with potential during the Europe and during the Asian hours that brings us to this point. So that's how
let me ask you this. I think one of the greatest opportunities, there were two last year, was the Brexit, where we had sharply lower S&Ps on the vote. And what was even more tremendous, and Carl Icahn must be a student of yours, he left his, the party, the victory celebration, when the S&Ps were limit down, when it was announced Donald Trump was president. And God, what an opportunity that was. I mean, I'm used to when you get to a limit, it usually sticks. And remember how pools used to build up, Don, when you had a limit move, and people would pay extra to get out that day. Happened a lot in the meets and things like that, where you had daily trading limits. But wow, were you there for that?
I was there. I would have loved to have said I capitalized on both of those, and I will tell you that I sub-optimized the opportunity in both of those. I do remember the election. If I recall, we actually started gapping up from a strong close or moving up overnight, and then when the results hit, of course, we tanked. Yeah. And once the limit was lifted and we started trading above the limit, Europe raised the market from that point, and then when the U.S. market opened, the cash session, we weren't quite down at limit. We were about halfway from where we ended up being later in the day. And Europe put the bottom in, right? U.S. leads, right? U.S. leads, but when the U.S. is sleeping, Europe leads. Right.
Interesting.
U.S. is the big dog.
Like a relay. It's like a relay race.
That's right. That's right. Exactly. And this is why I see these transitions. From the U.S. close at, let's say, 5 o'clock. U.S. futures market shut down Eastern time now, shuts down for an hour, reopens at 6. There's a 2-hour window until the Nikkei opens. There's a 1.5 hour until Shanghai opens, and then you go, into the next morning when Europe opens.
When do you sleep, Don?
Well, I can't be here during all those times. And when I was in my 30s and my 40s, though, I could trade 3-4 a.m. Europe, and I'm telling you, and I think you've seen this too, Dale. Where
I'm up at 3:30 every day.
The people that live in Europe, whoever's listening to me, if you are living in Europe, right,
stay there.
I envy you.
Yeah.
I envy you. You look at the charts, the rhythms, the patterns from 3 to 7, 8 a.m. Eastern time, my time, 9 a.m. Germany time and beyond. It's like, oh my goodness, it's so clean, it's so crisp. You can get size on. It's not the cowboy opening. It's not this, that, all over the place. It doesn't look like an EKG. It is so fluid, and there's gold there. There really, really is, without exaggerating it.
Don, in FX, a lot of the reversals happen in Europe before New York is here. Absolutely. So some of the big turning points happen while we're, Rip Van Winkle.
Yeah, absolutely. And when you get into things, those are the volume profile, for example, and you see, you see maybe the U.S. market closes its cash market, and you've got a very flat top at the end of the profile. It just has not exhausted yet. You'll often see that exhaustion happen as the U.S. market reopens, and then as Asia pushes us up a little bit. There are these patterns, and I still scratch my head. I see so many people, maybe through its necessity and through family obligations and all that, I see so many people that 5 o'clock, bang, trading's done, you're off. That's when I start.
Yeah. Don, I'm looking at what you have up here on the screen. There's a couple of things. The blue box in the middle at the bottom with the red triangles and the yellow. What's that telling you?
This is something that I've worked, actually, as a fellow who that worked alongside of me in one of my programs several years ago, who helped me program this. And what we're looking at here, by the way, is yesterday. This is, I intentionally wanted to show this to you. This was yesterday's move off of the early lows, support, and before we went off to the races. So what this is I'm a big proponent of viewing the market through the lens of different time frames and different indicators. But one challenge, as I'm sure you and your followers know, is that you risk mental overload, too much information. How do you assimilate all that information?
Yeah.
And I'm a KISS guy. I'm a keep it simple guy. And
Yeah.
so what this reflects at the bottom there is there's 7 rows of bias, basically, that goes from a very short time frame to a larger time frame, and I can see it evolve over time. So it's a mixture of time, and it's a mixture of the indicator itself. And one example, Dale, for example,
Is
bias
that
1.
proprietary, something you've coded or developed?
It's a little bit of both, actually. It is
Okay.
proprietary in nature, but some of this, I don't think you can duplicate it exactly, but you can probably get the same flavor by looking at a few things. Bias
Okay.
number 1, for example, this top row, if I flip back to our live chart, this row here is the cumulative delta, those that follow cum delta, which is also displayed up here. It is the net delta, the net difference of the aggression of contracts being bought on the ask versus sold on the bid. It's an objective, quantifiable, this is what is happening right now. And if we have that happening at key turning points, then that can be gold. So my cumulative delta indicator for myself is very, very important to confirm that I might be expecting something, but oh, there's the evidence. And so that's the first row. Blue is good, is bullish, and red is bearish. And then as you work yourself down the grid, if I flip back to the larger one here again, you've got other things happening. You've got a 3-minute momentum, for example, in bias 2. So as your momentum indicator is dropping here, and this is like a modified MACD. I call it a MACD on steroids that we programmed. If this is declining, then this is going to be showing red. If this is increasing, you're going to be showing blue. And we go down the pattern here. Bias 3 is a 15-minute chart. Same thing, momentum. And what happens is over time, if you're watching this live, for example, over the course of yesterday, you're seeing something like this evolve bar by bar. And this allows my very simple mind to look at this in a heartbeat and say, okay, I was thinking long, we're in a bull market, I'm looking for triggers to confirm, bang, there it is, and then I can start leading long on heavy on the long side. So it's a visual indicator. It combines literally about a dozen different time frames and elements that makes this simple mind able to focus a little bit better and just focus on order execution and price action.
Okay, and the box on the right, that's a big, looks like the World Trade Center.
Yeah, that is for those that follow a volume profile. And here's a screen that's got that day by day for the regular trading session. Jim Dalton's done a lot of work on this. There's been a lot of good. There's a lot of good stuff out there. It's another visual representation of the market. It's looking at the market price action through the lens of where did significant volume take place, and where did insignificant volume take place. And we'll look at things like what were referred to as low volume nodes, right? So what the market is saying here at the 2765 area is that the market didn't like trading there. It rejected that area and it traded above it last night. So the thought being that when the market gets back down there on the first or second test, it's again going to reject that and it's going to move back up to where value was accepted in the marketplace. And so it's a supplemental chart I use during the course of the day. That's why I have it off to the right. I term it like when you're driving a car, it's like your side view mirror, right?
Okay.
You want to be looking through the windshield, but you want to be aware of the side view mirror and kind of do that constant scanning so you don't miss your blind spot. And it's another visual way to look at it. And this is that poor high I was telling you about, very flat as we entered the cash market last night. The auction process, as is described by so many folks, is one where the market cannot stop going up until that last person is either barfing out the short, excuse the expression, or just paying such a high premium that nobody else is interested in conducting business there. And until you have that taper, the market's going to push higher, and that's what's happened overnight.
Okay, so Don, you have a new project. Okay, I've been to your new website and a new partner.
It is.
Go ahead. So
it's Miller Dane Network, MILLERDAYNE network.com. It is it's really an evolution for us. It gets at a holistic approach. There are a lot of good venues out there. We're not looking to take business away from folks. We're not looking to do anything other than improve on the model. And the idea of networking what we found, we've been up and running. This is our 5th week now, and the stories that we've heard from folks, it's been heartwarming. Is everybody successful? Does everybody, turn themselves into some kind of mega great trader? No, of course not. We're going to have the whole spectrum, like any place would have. Yet the consensus has been that it's been a tool to link people who would otherwise be doing this alone. And what we do is it's kind of like an AARP or a AAA rate, Dale. We try to provide services. We have the data streaming that we're looking at here, but we also have coaching available. We have algo programming available. We have bundled services such that if people were to purchase them separately, it would cost them literally thousands of dollars versus a couple $100s a month. And providing that value in a way where it's hopefully accretive to the trader's P&L over time, and it becomes an asset versus an expense. That's the model, and time will tell. But early returns and feedback from the participants has been as exceptional as I've ever seen with anything that I've been involved in. And there's things that we can continue to do better, and we're tweaking. The other thing that we do, by the way, is I'm on audio. I'm on this all day long, and it's a bit like it allows traders to use another sense, so they can look at the charts, look at their own systems and their order entry platforms, but they're hearing some air traffic control throughout the course of the day that's reminding us to look at different things. And I use my trades as examples, so I talk about them, but it's not say, push this button, push that button. It's like, okay, this is what we're looking for. There it is. There's some confirmation, and it's allowing people to use their ears over the course of the day. It's kind of like a squawk box.
Yeah, because if you gave them everything, Don, they'd be completely dependent upon you to stand up and sit down.
Exactly.
Because I mentor too, and if you just give signals all the time, people won't learn. They're inherently, most people are too lazy to do this.
Yeah, it's the whole package. It's got to be approached holistically. I'm convinced of that, and I'm about win-win scenarios. I want the traders to do well. I want those, certainly providing the service to do well. But I facilitate this, but I'm one of those 130 trading offices. I make my income trading. And so I have to remind them at times that I'm here alongside of you, and I'm helping and I'm facilitating, but mostly I'm thinking out loud over the course of the day, and you're just listening to me. So.
Right. So Don, when we talked a few years ago, and I admire it, we reap what we sow, but you were doing some philanthropic work for the Diabetes Association because of your personal experience. Is that going to continue with your new project?
Yeah, we still certainly work with the charities. Actually, I'm not. My daughter, my diabetic daughter, she was diagnosed with type 1 diabetes at the age of 10. It was a really tough time for us, and we did a lot of work with the American Diabetes Association, really for about 5 or 6 years during that time. And we gave them, I forget what it was, I think it's close to $20,000 eventually. It's important to give back. It's important to give back. So right now we're working with World Vision. We're sponsoring children. I tend to tag people who have my same birthday so I can remember when their birthdays are. We're doing some work there, and we've done some work with Boston Strong over the years with the marathon bombing, and we've got other interests that actually we're polling the people as we speak to see what interests they have. And we spent a lot of time during the MF Global debacle in working with James Catoulis and the Commodity Customer Coalition to help get people their money back. And so, we're certainly looking to continue to pay it forward, not only in terms of education, but in terms of financially supporting it. So the American Diabetes Association still remains near and dear to me. They do a lot of great stuff. We're trying to look for causes where they spend, a bulk of the money that we give them. Just about all of that goes to the effort itself and not to administration. So we try to be careful there.
Okay, Don. So what's the best way people could get in touch with you and check out your offerings and your program if they want to become
absolutely
a jellyfish?
So my email address is the best one is right, Don at millerdanenetwork.com. That's MILLER.
Do you want to show that website? Well, we still have a few minutes.
I can do that here. So let me. How do I minimize something here, right? So,
Don, it's interesting you use the jellyfish as, an eagle is my animal spirit right now, but I've been a lion I've been, you know, a sheep early in my career.
Oh goodness, yeah.
But you know, it's interesting. The jellyfish, you know, you see on TV them promoting a supplement that's good for your brain that comes from a jellyfish.
It is. It is.
You know that?
I think it's Prevagen, isn't it? Prevagen.
Oh, okay. Yeah, something like that. Okay.
Yeah. Yeah. So this
You're
is
way ahead of the curve. Okay, go ahead.
So here's the website. One of the interesting things, and it's Miller. I know it shows as a different address down here, but if you go to Miller Dane Network, MILLERDAYNE network.com, that will bring you to this. It's just housed in a different directory right now, and it will show you all the services. It will show you some feedback from the early participants. And the cool part of this deal right now is if you look at this global office menu item here, these are all of the global offices that we have connected now in just 4 short weeks. We've got about 90 in the U.S. in 31 states, quite a lot around the New York area, as you can see. And then we've got we're international here. And then here's a close-up in terms of where here's me. I'm my lonesome guy out here in Cape Cod.
Nice.
So that's the site, and the best way they can reach me is just Don at MillerDaneNetwork.com. Or Don at DonMillerLive.com. Either one of those will get to me. And we are continuing to offer a charter rate at $395 for life. So no matter what services we offer down the road, we will keep that, and we will honor that for people that have taken a little bit of a risk with us, if you want to call it that. Although we think it's like an option, we think that there's no risk and tremendous upside. And again, it's a different way of viewing trading rooms. And again, I'm not here to sell or hype, but it's something that we're building, and we're going to continue to evolve it based on trader feedback and go from there. So you know, the stories so far have been very encouraging, and including one heartfelt letter that I got just on Wednesday, where he went to great lengths, you know, talking through how he felt about it. And we take all this to heart, good, bad, and indifferent, and move on from there. So.
Well, I wish you much success, Don.
Thank you.
And it was great talking to you and seeing you. And I hope the best for you and everyone that hears your voice narrating during the day. My trading warrior brother, Don Miller, thank you for joining us today.
Thank you for the privilege and honor. Stay well, everybody listening. It's an incredible career, and God bless you all. I wish you all the best.
Thank you, Don. Don Miller, and you can find him on Twitter at MillerDon, and that would direct you to wherever he is.
Absolutely.
So that's it, everyone. You're very welcome. Thank you all. Don, you are on investing.com today. They're live streaming this event, and we'll see everyone tomorrow for TGIF Friday. Good hunting, and remember, most of all, don't just count your pips, count your blessings. See everyone tomorrow. Thanks again, Don Miller.
You're very welcome.